Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Well, good afternoon, everybody. Boy, there sure is a lot to talk about today. Very interesting. So I figured we better get an update when we finally broke across this descending triangle that's been here for 6 months. We have been kind of staying above it on the outer side. From a distance, you can see that we have started to move sideways. So it's becoming more obvious, but we're not out of the woods yet because of this little high. We've been so flat, and this kind of cemented another lower high. And having too many of these, no matter what the formation, is not great. So if Bitcoin can't get above 19,600 in, fairly soon, we'll be in trouble. What's interesting though is that we tried to be in trouble today, right? So today we already had a pretty decent sell-off down to about 16 or 18,600, and but nobody can get the bears on board. So this is where it's just an odd thing, where I feel like this is more of a falling wedge pattern, a little bit more of a falling wedge pattern than it is a descending triangle. But either way, we're just gonna be patient and see where we go. Today's just really unusual though, because we had this really long tail, and we still have a ways to go. We're 6 hours away from close, so this could land anywhere, but this long of a tail is usually a support, even if it's temporary. And so I mean, it would take like literally 1 or 2 days to be back here, and even matching this going up to 19,550 would be bullish, because we've put in these lower highs, and we've kind of been squeezed a bit. If we reach a previous high, it will start convincing people that we're changing directions. So just very, very fascinating. All right, so I've got a couple of things to talk about. One is I'm looking at our just minute by minute chart. So this is Bitcoin. This is something I like to look at because we've seen so much similarity in the S&P, which is in the middle, and Bitcoin. So if I zoom out so that we can get since the beginning of today's trading range, you can see that the S&P has outperformed, like from the get-go. The S&P, it has outperformed Bitcoin all the way across the day, and middle of the day we started that gap started to widen. So S&P is outperforming Bitcoin. I think Bitcoin might have been even more bearish, except it's tracking the S&P so much. So the S&P is just having this weird day that's up 2% right now. We're intraday still, and it's kind of pulling Bitcoin along because Bitcoin earlier, so if I zoom out on Bitcoin, in the middle of the night, Bitcoin had a sudden sharp drop off. So I think someone was trying to scare the market down. But by the time markets opened, so this might have been pre-market on the S&P, because I think pre-market the S&P wasn't looking so hot. But then we popped back up and we opened here. But Bitcoin has struggled today versus the S&P. You can see how much green zone there is on the S&P, and it's been really sparse on Bitcoin. But yeah, very, very interesting. So because of this trend, and I've seen this match between Bitcoin and the S&P 500 for quite a while, and I have something pretty cool that I want to show you guys. So let's see. Let me go to my daily chart really quick. So this is the S&P, and the S&P has been kind of really doing these wild patterns. And my original kind of thought process was, well, if I could predict the S&P, since it's going so close to Bitcoin, at least lately, it'll kind of help give me a flavor, or at least a little bit of a premonition of how Bitcoin's going to react as well. And so where the S&P has 100 years of data, but I just used the most recent 30 since it seems to be, I don't know, it was what was most easily available. Plus, I think now with the Fed jumping in and pushing markets around, I think it's a little bit different flavor of stock market than it was in the old days when manipulation from the governments and central banks hopping in to make adjustments may not have been as high. And you know what? I may be wrong on that. But anyway, so I kind of have a decent data set, though. 30 years is pretty good, especially when you're looking at daily data. And I'm looking at this, and I created this cool little AI predictor that will look at the last 50 days and then look for the most similar situations that have happened in the past and find the top 10 that match most closely. And look what it turned out to be. So this is the results of my work. So I was kind of up last night messing around, kind of programming this, and you gotta admit this is pretty cool, right? So what we're looking at is this is the last 55 days of the stock market. So this is the S&P 500. You can see all of the moves, and then you can see our big bullish engulfing candle, and we're kind of bouncing a little bit from there. And then what we have here are the top 10 most like events that happened in the history of the stock market going back to like 1990 or something. So of these experiences, you can see what happened the next day, what will happen in 2 days, what happens in 3 days, 5, 8, 13, and so on, up to day 55. And so I figured, since we're I can take these returns and I can show them physically on the chart. So our most like event, which was in 2008, it was July 24th. So July 24th, you can see how this move, the axis looks a little strange. That's why it's a little harder to see. And the axis is messed up because the bottom of the chart fell out. If we had gone exactly flat, it would look very similar to this. So in July of 2008, you could easily see what things looked like leading up to this. So these days are the days that are lined up perfectly. And then this was sort of the aftermath. And you can kind of see that there wasn't really a lot of in between. It was either really positive, 2% is pretty significant on the stock market, or it's down 1.5%. Like, there wasn't a lot of middle ground. So predicting today's action was a little harder because it was very polarized. And what I believe that I believe that came from the amount of volatility that we're seeing. The stock market doesn't usually see these kinds of ups and downs, and we're swinging a lot. In fact, we're swinging higher than Bitcoin lately. So the volatility in the S&P is kind of, it makes the next day pretty unpredictable, but it's starting to show in the couple of weeks following, and in a matter of a month, generally we're higher than we are almost all the way across the board. So this is kind of an interesting thing. So now this tool that I've created, it's very neat because I can update the dates just by clicking on it. So if I click on the 25th, so these are just literally 1 day difference because the variance, this experience was so close that even the variance of moving the chart one day, the variance was still with the second best experience. So this is the next one. But if you look at 2000 in July, this one was our next most like event. So you can see the chart looks kind of similar, but not necessarily. You can see how we kind of dipped down here and came up through here. So we've got our little double top bump thing. And then you can see that we've actually climbed over the next month or so. And then the next data point is 2003. So February of 2003, it's doing kind of the same thing. So for a temporary kind of short-term view, we may be in for a little bit of an upside, which if you listen to the news, they would tell you the exact opposite, right? The whole world is burning. But I thought it was very interesting that if you look at the dates, the most like event that matches the most is either extremely bad or extremely good. So 2008 is matching very closely. There are 4 data points that match our most recent activity the closest. So the fifth most matching event shows 2008, and this is all like summer of 2008. Here's the other one, but the first 2 are the most like the S&P. But then on the other side of that, you have quite a few events in 2003, February of 2003, that match the closest. And so these are all fairly bullish, well, extremely bullish. I mean, these are actually pretty good. Obviously, there are a lot more factors in play. You can't just, look at things blindly, but as far as there being a temporary reprieve, it actually looks more likely than not likely. So this is all very interesting, and today's data, where we're up almost 2% on the stock market, when that green bar comes in here, all these numbers will change, and it'll find a close match with that new data, and we can kind of see where things go from there. Well, that helps us on the S&P to kind of see what we might be in for. Obviously, this isn't an exact science, but I figured that since I already did this and all I need to do is plug in more raw data, we can do a similar thing for Bitcoin. And this is where things are very interesting, and it really pretty much tells a lot about the kind of precarious place we're in, because either we're going to launch and it's going to be explosive to the upside, or we're going to drop out the bottom and it's going to be explosive to the downside. So this is the exact same AI predictor with just Bitcoin data. So Bitcoin data, this is our last 55 days. I've included, even though we haven't closed our market today, I included just the data point for today, just to give us an idea of what could happen. And anyway, the numbers here are even more precise. So they are, but what's interesting is that because of this unusual history, it's only finding really 2 outcomes. And you can see that they're just evenly split among the top 10 most likely events. The most likely event is that we are similar to October 31st of 2018, which was about 10 days before we dropped significantly down, established the low later on in the year, and then recovered from there. So this is the bottom dropping out of our descending triangle scenario. And it found it not once, but twice. And the second one makes it even more imminent. So that's not great, but these are the top two matches for what Bitcoin is likely to do based on its current chart structure. The top third one is more bullish, extremely bullish. In fact, this is the bottom of 2020 when we started moved up pretty significantly right here. So that scenario plays out 4 times. Like we find a close match 4 days, and you can see that this day is a match to this day. So they are weighted heavily on the more recent action, and then the further you get out, the less correlated it is, but it still takes it into consideration. So we have 2 events of really ugly, bad going down, and then you have 4 events of us just about to explode, and then it's mixed. You got a drop and explosion, drop, explosion. So this is not very helpful. We already kind of know that, but it's quite sobering to see in the, if you're using an AI to predict, it is pretty much a 50-50 right here. It's 50-50 that we're going to drop out and it's going to be very ugly, and 50-50 that we're going to start showing strength and then explode. And really, there's no way around it, because when you're tightening and you're intensifying your lack of volatility, this is an absolute pressure cooker. And all all professional traders know this, that the tighter you get in a range, the more explosive the outcome will be. I just think it's odd that we've tried to blow out the bottoms several times and bulls have caught it. In fact, ridiculously amount of times. This is so unusual to see this many. And our most recent attempt was today. So, what does that mean? I'm not entirely sure. It's still 50-50, but I just feel like there's just the slightest edge that that bulls actually are in control. But it's really fine. Like this is a definite it's a very razor thin edge of whether things go down or up in a volatile way. And at this point, the charts haven't told us which way we're going. There's lots of evidence that we're going down, and there's lots of evidence that we're done. So at this point, we just have to be patient and sit and wait and make sure that we're able to handle either outcome. But yeah, that's pretty wild. So that's the way Bitcoin looks, and that's the way the broad market looks. The final thing I wanted to mention is that Ethereum is obviously being squeezed. There was a lot of sell pressure after the merge, and I said that the merge would probably, we'd see sell pressure and there wouldn't be anything for 4 weeks, 2 to 4 weeks. And I think the merge was roughly, it was about a month ago. So we're about there. And I feel like there should be pressure coming up on the upside. Here's some proof of that. So look how when we merged, the amount of inflation that the coin supply on Ethereum, it kept creeping up, but it was nothing like we would have if the merge hadn't happened. Well, we peaked out right here, October 8th, and we have now completely reversed, and we've been dropping. And how the total market, the money supply decreases is because of burning. And I look down here to see what's happening, and there's a very stark increase in Uniswap activity. So people minting, people swapping, people trading on DeFi has increased a lot, which is interesting too, because at a pivotal moment when markets could go up or down explosively, there's a lot of action here. So that means that there are whales taking a position. So lots of volume preceding a big move. That means there's an accumulation event happening. But if you kind of go down a little further, you'll notice that that there are some NFT projects that have popped up in here that are kind of interesting, especially if I go to like 1 hour. You can see how many NFT projects there are. Yeah, I guess it was more stark more recently. Let's see. Yeah, but a lot of these, they just created high gas fees. There are lots of minting, lots of activity, and all of this kind of happening all at the same time means that in the last day that we're almost burning twice what's being issued. And so whatever's being issued, another 0.89% of that is being burned. Pretty remarkable. If this continues, then there will be deflation on the total coin supply on Ethereum, which would make it the most bulletproof store of value you could possibly imagine when you add the utility in with the fundamentals of money supply. So if we had continued to mine, we would have added almost 434,000 Ethereum to the market, and we have only added 2,000 right now. So there is a lot of pressure building on Ethereum, which will explode to the upside at some point, because where prices were level and we were adding 400,000, over this period of time, that means that buyers were having to absorb this, or holders. But if that pressure has completely relieved, that means that all that buying pressure or holding power has to be the same. And so there has to be, the side that got removed was the sell side or the supply side. And so you would expect prices to move up, which I certainly do. I think that this will be a pretty strong mover once everything kind of shakes out. I think everyone's afraid to make a significant move because of the big question mark around Bitcoin, because this will go up or down as we've seen. I mean, we can see it from the charts, but we're also seeing it in our AI project as well, that there's really two outcomes. It's either going to violently go up or it's going to violently go down. So it's just a matter of time when whenever this gets to a head, then it will, it'll explode one way or another. In the short term, if we have, where our low is so low and we have a support candle at the bottom of our most recent swing, and we have shown support on this kind of medium line. It's higher than our trading range. Our trading range was down here, and this has now established a new low. Obviously, the more you touch a line, the more likely it is to break. And that's why today should have broken. It should have broken it because of that many touches, and we're on a downswing, lots of pressure on the down. And then we have this green candle with a long support tail. That means that we're probably going to have a day or two of upside. And if we do, then we're really going to be confusing people, because it'll become more and more obvious that we've broken this downtrend. And then that might give people confidence. A close above the 50, which is really low, 19,600. A close above 19,600 will solidify a change in temperature, because we'll have exited the red zone. So lots to think about, and I'll leave you there. I hope everyone has a good weekend. I'll be out. I'm going to be out traveling tomorrow, so I'm only going to be doing a pro video for tomorrow. All right, you guys, enjoy your weekend. See you Monday. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.